What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. Make sure you hit the like button. That way it helps the channel grow a little bit more. Thanks to all those that continue to watch and continue to help the channel grow. Also, make sure you hit the subscribe button if you haven't already, and the notification bell. That way you're notified when we release bonus content. Nightly and weekend videos like tonight identify triggers and targets for trades from scalps and intraday trades all the way up to swing leap trades. So if you want a deeper dive into exactly how we set up our charts with the color coding for the different time frames, broadening formations, things like that, make sure to check out our bonus content on the YouTube page. And for more free information about the strat, which is the base of our charting method, you can find more information in the description of this video. So I do encourage you to watch the full video, because along with just the triggers and targets that we do give some pretty good insight into the price action on all time frames. So let's take a look at the agenda for today. Those are the triggers and targets. So our agenda, we will look at Friday's price action. Then we'll zoom out like we always do, look at the week, month, quarter, and year. Make sure we have some perspective on where we're at in the market. Then we'll look at the market maker's expected move for the week of October 31st. And we will zoom back in to set our 4-hour markers and the triggers and targets for Monday and next week. And we'll also do a quick review of the triggers and targets for the month, quarter, and year. So just looking at today's intraday price action, this is it. Sideways, right? If you're a scalper, you could have got a couple of riskier plays, and then one, good confidence play, right? So we have, as far as levels on the chart from where we're opening, we had the overnight high up here at 43.90. We have the market maker's expected move high at 43.46, and we had our opening print at 43.43. So, previous high day as a target already out of the picture, right? The only target that we would have from a scalping perspective is the overnight high, and even that probably won't have a lot of magnitude because we were opening close to the highs, close to overnight high, right? So opening print was here. We got to push up, rejected. I've got these fib extensions, these brighter fib extensions here. These are just fib extensions of the gap from last night. So you can see here are the fibs inside the gap, and then these are the fib extensions, the bright ones here. So we got to push up to the 161.8 fib extension. Oops, make this bigger for everybody. There we go. We got the push up to the 161.8 fib of the gap, right? And then we rejected off of that. And it brought us back down to opening print, which also lined up with not only the market maker's expected move high, but the 100 fib extension of the bull flag that we have been pointing out for a long time, from the April 7th low to the July 7th high. So we've reached that 100 fib extension once again. So we just want to keep that in mind. And that's where we bounced with the rejection, right? And then we just played around with market maker's expected move high, opening print, and the 161.8 fib extension of the gap, right? Just chopping up and down. Didn't even get a higher low on the 5-minute time frame until 10 o'clock Central Time. Got another higher low, here to stay in the trade. Continue to get a higher high, higher low, higher high. Lower high, but it got a higher low. Equal high, higher low, and you could see how the highs were kind of getting more flattened out. So you could kind of tell that was if we weren't going to just go sideways at that point, we might get a drop. That aligns with the overnight high as well. So a good reversal point. And then that's when you finally did get the lower high, lower low and lower high. So you would want to exit around here. So not a lot of magnitude on the move. The move was overnight, really. So, our calls for November monthly expiration, really popped again today. And, it was more of a kind of consolidation profit from intraday perspective if you were in swings, right? So not a whole new, to play here. And we'll see in a minute how we're back up at the top of the range. So it could be a little risky, swinging over the weekend with shorter dated contracts, not knowing what tomorrow or Monday is gonna start out looking like. So that's what we got from the intraday scalping perspective. Like I said, there was one safer play here. This is the higher low, basically at opening print. Our rule: higher lows at or above opening print, we look for calls. Lower highs at or underneath opening print, we look for puts. And yeah, that's basically all we had today. We finally got the succession of lower highs, lower lows, lower high, lower low, and then the bottom kind of dropped out here. I don't want to say the bottom dropped out, but we fell back to opening print and then pushed back up to that 150 fib extension, and that's where we got the rejection before the end of the day, which was really just people selling going into the weekend. So taking off a little bit of risk as they go into the weekend. But again, that's it from the scalping perspective. Let's look at the day chart here, and we can see what's going on. There we go. We can see that we had, again, the big gap up. We've got the range that we've been in for the past, basically 2 trading weeks, from like 37-ish. I guess it's pushed down to 35, 36, 35, but a bulk of it between 37 and 43. And again, you can see that we're at the top of that range again. And the candle structure, it kind of points to going back to the bottom of the range again. Just looking at the candle alone, it's an inverted hammer. It's not even a green inverted hammer, it's a red inverted hammer. So definitely more bearish from just a pure candle structure perspective. But we do have the big gap up. This has been more of a pullback market. So just because we have this structure on the candle, and just because we may even close the gap on Monday, doesn't mean we're going to go all the way back to the bottom of the range. It could just be a pullback and then push back up. So just want to be cognizant of where we're at in that range, though. We're at the top. So, kind of temper your expectations going into next week. Just be ready to play it either way. Like I said, we've got our shortest dated contracts are November monthlies. I think it's like November 17th is the expiration, but so we've got a little bit more flexibility, and we've been in those since the bottom of this range. So we're definitely very positive on the contracts. We've got a little wiggle room to see what happens with this gap. If we do get the gap fill and the continued push down, I'll probably take profits at that point, and look to get into puts to get to the bottom of the range, and then re-enter on calls. Maybe probably some November monthlies again, and go from there. Maybe look at some Decembers if we really want to swing for to see if we're going to get the break above that range once we do push back up to it. But we'll assess it at that point. But shorter dated contracts, you're not going to have as much time to work with them if we do get some pullback. So that's why you saw a lot of people taking risk off the board at the end of the day today. So again, that's it from the day perspective. I hope I've made this chart big enough for people to see. But again, we've been in this range here over the past couple weeks. We're at the top of the range. We've hit this 100 fib extension of the bull flag. So we just want to, beware that we could pull back to the bottom of the range. Now, if we get the pop above the range, if you're a breakout trader, so go ahead and take that. But if you want to wait for the confirmation, then, we wait for the breakout, the pullback, retest this area, and then we can enter longs if we get that reversal signal going back up. I think that's enough from the day perspective. Let's just take a look at how the week turned out. Let's pull out this one. So, we got very close to going a 3 on the week, or a engulfing candle, only 2 cents away. Was that Wednesday? When we pushed down, we were just 2 cents away from, making an engulfing candle. Candle structure, again, just looking at pure candle structure, green hammer in the middle of an uptrend. I mean, there's not a whole lot you can pull out that's bearish. I mean, I guess there's a little wick at the top, and we're hitting the 100% fib extension. But we've hit it before, and a lot of times they say the more times you test a level, whether it's from the underside or from the top side, the more likely that level is to break. So if this is our second test, maybe it will take a couple more, but it does look like we'll probably push through there. We're getting through this weekly broadening formation as well. We will have this resistance of last year's 50% level, 46.79, but again, we'll see how price reacts when we get to that level. But again, not a whole lot to say negative from a weekly perspective. Here's the week chart. Here's the flag pull. Here's the flag. There's the push up. We're at the 100 expansion. Not a whole lot else to say there. All right. One thing I will also point out, we don't look at RSI a whole lot, but we do keep it in the corner of our eye, and we are getting pretty kind of elevated with RSI. We're above the 70 level. So just want to keep our eye on that. Plenty of room for pullbacks. Let's look at the month perspective. We're still very much in a two up in force, meaning the close price today is above the close price of last month. So it's in force with the two up. Again, not a whole lot bullish to say. Another bearish thing. Not a lot bearish to say. One bullish thing that we can say is we're in this 3, right? And many times, once you have a 3 or an engulfing candle, price will take out one side, and after it's taken out that side, if price comes back up within that engulfing candle and reaches that 50% level of the engulfing candle, there's a high percentage chance that it's going to go take out the other side of that engulfing candle. Now, we're not there yet. It'll take at least the close of this gap up here at 50 to be at even close to the 50% line of this engulfing candle. But something to keep in mind as we continue to move forward. All right. Looking at the quarter chart, again, this is the most bullish chart of them all, in my opinion. It has one of my favorite reversal patterns, the 1, 2 down, 2 up. In this case, it just happens to be combo, right? So we have the 1 in the last quarter of 2024. We have the combo 2 down with the first half of 2025, and we've got the combo 2 up with the second half of 2025. And as long as we are above the high of the 2 that follows the 1, then this strat reversal is still in force. So as long as we're above that 36.15, we're still in force. We're still looking for this high of this 3, which is the candle to the left of the 1, and that high is 70.08. Again, I'm not saying it's going to happen this quarter. I'm not even saying it's going to happen the first quarter of 2026. But as long as we're above 36.15, that is the ultimate magnitude or the ultimate target for that move. All right. And then on the year, we touch on this every time. We've turned it around, right? We triggered the 1, 2 up, 2 down. We've made a higher low on the year perspective. We're green hammer. The higher we can close, and if we can close at the top of this candle at the end of the year, that gives us a better chance of going 2 down, 2 up next year. And then that also has a magnitude of 70.08. So 70.08 would be that next magic number. For a while, it was that 36.15. We've conquered that. It looks like we're using it as support at this point, and we're going after that next target. The ultimate target is 70.08. All right, so that's what we've got there. Now let's go ahead and take a look at our market maker's expected move. To do that, we go ahead and bring up our options chain. I use Thinkorswim, and we can see that the options chain for October 31st, if we go to the right, there is a plus or minus $5.38, we'll call it in parentheses. That's the market maker's expected move here. They expect from this close price of 43.14 on Friday that next week we will see price action plus or minus $5.38. So if we go over to our notes, and all right, these are for Monday, October 27th. Again, 44 trading days left in the year on Monday. Close price on Friday was 43.14. We don't know what the week flip is yet because it's not open, but we know where the month, the quarter, and the year would flip red at these prices. But then getting back to the expected move, we know that for 10/27 through 10/31, which is this coming up week, we have an expected move of $5.38. So if we add 538 to 43.14, we get 48.51. Subtract 538 from 43.14, we get 37.75, giving us a range of we should see price between 48.51 and 37.75. All right. So we go back to our charts. We can take a look out here. Let's just bring in swing chart, and we can see charted out here. We have, oops, if I can, trying to fit it all on screen, especially for those on phone. But we can see at the bottom of the chart, we've got 37.75, and at the top of the chart, we've got 48.51 marked out as our market maker's expected move for the week. It's in purple. All purple colors are weekly colors. So that just lets us know, in just glancing at the chart, where price is expected to move. Right? Let's go to an hour chart, kind of zoom things out a little bit, and we can see, in comparison, it looks as though we should be pushing higher, right? Really testing last year's 50% line and going higher, which I'm sure the bulls would be happy to see. But we do have to contend with this weekly broadening formation, a couple of daily broadening formations. Again, that 50% is going to be a inflection point, right? It's going to be fought over once we get there. So it could be a rejection point, could be a point that we push through and use as support to bounce off of, but it does look like the market makers do expect price to move up overall. All right, let's go back to our scalping chart so we can look at the 4-hour markers and the triggers and targets for Monday. What's that? October 27th. All right. So if we look at today's price action, again, very constrained, right? We've got our previous high a day up here at 44.16, previous low a day down here at 42.96. Currently, the overnight high is 43.33, overnight low is 43.14. Those are most likely going to change. Let's just say we get a little push up in overnight high, and then even overnight low pushes down a little bit. Let's just say that happens, right? Looking from a pure scalping perspective, especially at the beginning of the day, early on in the day. This is our proven and repeatable strategy. Let's say we get price that opens somewhere in between overnight high and overnight low, right? We'll say it's here at 43.45. We want to look to see what price does. So we open here. If we push up and get a rejection off of overnight high and we start to fall back down, do we get a higher low at or above this opening print level? If we do, we want to enter calls, and we want to first target the overnight high and then target previous high a day. Right? So from a scalping perspective, that's how we're looking at it to the upside. If we open here and we get a push down and say, we get a bounce off of this 15-minute broadening formation and we push back up, but we get a lower high at or below opening print, lower highs at or below opening print, we look to get into puts. And once we get into those puts, we first target the overnight low, and the second target is previous low a day. All right, so very simple. Not too much more to go off of, right? Or to go on with. If you need more, just kind of rewind or shoot me something, comment in the video, and we'll see if we can dive a little bit deeper. But I think it's pretty self-explanatory, and that's how we approach it in the morning, right? So let's get rid of that, and let's look at things from a more of a full day trade perspective or a longer intraday perspective, not just some type of scalp. If we look at what we've got here on the 4-hour, we'd like to look at that first. Always keep an eye on the 1 hour because that's going to tell you when the 4-hour will trigger or continue in a specific direction. But if we've got the 1 hour moving to the downside, and then the 4-hour, if price action goes below below the low of the second 4-hour candle of Friday, which is 43.11. If price goes below this on Monday, make this bigger. I don't want to make it too big because we got to still keep in perspective where we're at, right? If we go below this, that gives us a 2, 1, 2 down. Now there's not a lot of magnitude here, right? The trigger is here, the target is here, but we've got this gap below. All right. So first target, of course, would be half gap. We've talked about and we've shown in the past how many times price will enter a gap and bounce off of the halfway point of it, even if it's temporary. But that is a major point of inflection from an intraday perspective. Then we've got the gap close, and then also if we trigger this 2, 1, 2 down, once we reach this magnitude and go past it, that triggers the 2 up combo 2 down, and that magnitude is the low of this 2 here, which is 40.75. So we'll look at the hard numbers in a second when we look at the notes. But to the downside, there's a little ways to fall, and it still not be a major issue, right? Just because of the size of the gap up that we had. Now, if we get price action to the upside and we price goes above the high of the second 4-hour candle of Friday, that triggers a 2, 1, 2 up. that triggers at 43.82 and has a magnitude of 44.16. All right, now we'll have some extended targets. We have some fib extensions from this gap that we'll use as extended targets moving up. But just pretty simple: 2 1 2 up. Once we do that, we're in kind of a two up combo, 2 up continuation, and we just have to look at our extended targets from there. Now, from a full day trade, maybe overnight swing, maybe even couple night swing trade, we'll take a look at the day chart. And again, I think this is pretty important because we had the huge gap up, but we didn't go anywhere today. We got stuck pinned, and we're at the top of the range again, right? So if we couldn't get above it, we've got a gap down below. There's pretty good chances that we could fill this gap tomorrow. On Monday. Now, that doesn't mean we're going to just continue crashing or quote unquote crashing, going to the bottom of the range that day. We may stop there, get a little bit of a bounce, but if things are going to remain bearish, maybe, reject off of the half gap, or what level was the half gap, maybe on Tuesday of next week, and that pushes us down further. And we go test last week's 50%. We've talked about every week how important the previous week's 50% line is as well. So, to the downside, pretty good probability that it could happen, and it's not the end of the world. Once again, we're in this range. Back in June, July, August, we were in an 11-week range from 24 to 28. A couple week range here, especially with a bigger magnitude, with the basically 36 to 43 range. That gives us more to play with than just 24 to 28 as well. So, switch from being a trend trader to being a consolidation trader or a sideways trader, right? A range trader, right? Play those ranges, play the edges. Once we get to this top and we get a reversal, go ahead and buy the puts for the bottom of the range, sell calls. Once we get to the bottom of the range and we get a reversal signal back up, go ahead and buy calls for the top of the range, right? It turns into a repeatable strategy in and of itself. But we just want to keep an eye on things from the day perspective. Yes, the gap up was very bullish, but the candle structure is more bearish, and we are at the top of the range. So just want to watch out. If we do get the push down, close the gap, that's the 2 up, 2 down. The gap close actually isn't the magnitude of that move. The magnitude of the move is the low of Thursday, right? That's the 2 up, 2 down. Once you triggered the 2 down, the magnitude is the low of the candle to the left of the 2 up. So that would bring you all the way back down to the market maker's expected low. Funny how that level's there, right? And kind of a reason why we have these out here. So, and again, even then, it's not the end of the world. We're still in a range. We haven't even gone 2 down on the week. We've still got plenty of opportunity to put in higher lows on the week. I would say it's much more bullish consolidation environment than anything else at this point, right? We're obviously not trending. I mean, from a longer term week and then a month and quarter perspective, yeah, we're trending, but daily, intraday, we're getting this up and down action, and it's not the end of the world. It's actually kind of a relief sometimes, because it's kind of hard to continue to buy the top of, if we're just keep going up and up and up, every time you buy, you're kind of buying the top, and so it gives you less risk to reward to play with, right? So when we get this sideways action and the pullbacks, it really helps kind of reset things and give you better chances to get better contracts, right? So I guess that's enough. Let's go to the hard numbers. Let's go to the numbers here in our notes. Again, we already went over the scalping repeatable strategy, right? Higher lows at or above opening print, we get calls. Lower highs at or below opening print, we get puts. Again, we know that we have the gap below from today, Thursday and Friday. And then looking at the intraday trades, the 4-hour chart, if we get price action to the downside, we trigger the 2-1-2 down, which doesn't have a lot of magnitude. And so if we reach it and breach it, then we get the 2 up combo 2 down. So that triggers at 43.11. The 2-1-2 down magnitude is 42.96. So again, not a lot of magnitude. But once we get the two get past 42.96 to the downside, that triggers a 2 up combo 2 down. Now that magnitude is 40.75. Now we're in the face of an uptrend, so we want to have some intermediate targets. First one being 42.22, which is half of the gap. And then 41.93, which is last week's high. All right, so wait, last week's high. Oops, what are we doing? 41.93. I'm sorry. 41.47. I don't know why we had that in there. So gap close, because that is not last week's high. So this is gap close. All right, so we've got the half gap and the gap close as intermediate targets. I guess we could throw in 40.06, last week's 50%, because the move would take us all the way down here. Oh goodness, that's why I'm looking at the day chart, not the 4-hour chart. I apologize. So the gap close would give us that, and then the full move of the 2 up combo 2 down would be that 40.75. That's why we had that in there. I was on the wrong chart, right? But it wasn't last week's high. It was that's just the magnitude of the 2 up combo 2 down. 40.75, 41.75. Yeah, 40.75. So that's actually the magnitude. All right, I apologize for any confusion, but in the face of an uptrend, when trying to set targets for the downside, it can be a little bit tricky. But just to be a little bit more fluid here, again, triggers to the downside is 43.11. First magnitude is 42.96. From there, we have an extended target of the half gap, which is 42.22, and then the full gap close at 40.75 as the magnitude, or full gap close plus the rest of that little candle there. To the upside, we would have the 2-1-2 up, and then that would also trigger the 1 combo 2 down, combo 2 up. So that triggers at 43.82, the 2-1-2 up, and then at 40, the magnitude, which is 44.16, the 1 combo 2 down, combo 2 up would trigger. And that would give us a target magnitude of 45.02 ultimately, but we did put an intermediate target in there as well, just because we are at the top of the range and we don't want to get too carried away with our extended targets, right? We could still be in some type of reversal to go back down to the bottom of the range, so we don't want to get too carried away, especially on the 4-hour chart. Now on the day chart, if we go to the downside, that's a 2 up, 2 down, triggering at 42.96, and the magnitude being 41.47. Extended targets of 40.90 and 40.55. If we go to the upside, we get the, oh man, I apologize. I did not have that trick put in there, right? Yeah, that's a 2 up, 2 up continuation. I don't know why I had 2 down. So 2 up, 2 up continuation, triggering at 41.16, targeting 44.45, 45.02, and 45.20. Again, we're at the top of that range, so I don't want to get too carried away with too far out targets, just in case we do, go back down to the bottom of the range. So apologies if there's any confusion for anyone, but it should be pretty straightforward here. I've got everything mapped out, and we looked at the charts already as well. So should be pretty clear from an intraday and day trade, maybe overnight swing trade perspective. Looking at the week chart, we won't go back to the chart. We'll just go over the numbers for the week. If we go to the downside, we do trigger a 1, 2 up, 2 down, and that's got some pretty decent magnitude. Actually, it doesn't have to, because that inside week was very inside, and yeah, there wasn't a lot of magnitude. So either way, it triggers at 35.97. Yeah, and we can see the magnitude here is only about $2, a little less than $2. It's still a decent move for SOXL, but we've got extended targets of 33.18, 31.36, and 30.68 if we really get going to the downside. To the upside, we would just have a 2 up, 2 up continuation if we go above 44.16. With that, though, we would have our extended targets of 46.79, 48.79, and 50 flat. By that point, we'll have worked through the resistance that we've been seeing on the day chart, and so that's why I've kind of given those more extended targets. But again, we don't want to get too carried away knowing that we're at the top of the range here, and not just expect for us to just go running off into the 50 area just because we closed with the green hammer today, right? There's still a green hammer this week. There's still a very good possibility that we could see that downside action. Never know what's going to happen over the weekend. From the month perspective, again, we won't go over the charts. We're in a two up, triggered at 35.49, reached this 41.19. We also went ahead and got that 43.80 as well. So we're still looking for that 46.79. On the quarter perspective, again, we've triggered that 1-2 combo, 2 up, combo 2 down. As long as we're above that 36.15, magnitude is 70.08, and we were able to actually knock off another target this week, the 42.04. So we've knocked out a couple of targets, still continuing to work our way up. The main thing is we want to stay above that 36.15 level. And then on the year, we had the 1-2 up, 2 down, but we've turned it around. We've got a nice solid green hammer on the year, a higher low from the on the chart as well. So just looking to continue to finish at the top of the year. I'm sorry, at the end of the year at the top of the candle, so that we have a much easier chance of going 2 down, 2 up in 2026. So that's it for this video. Hope everybody has enjoyed it. Again, I tried to cram in as much information as I could without taking up too much of your time. I hope that these videos have been very beneficial to people. We're seeing the numbers grow of views and subscribers, so it does seem like it has helped quite a few people out there. So we want to just continue to do that, just helping people as much as possible. We're not selling anything. We don't have any memberships or anything like that. So a like goes a long way. If you enjoyed the video, go ahead and give it a like. It helps expose more people to this strategy and this method. So thank you again to all of those who have helped the channel grow. We really appreciate it. Thanks to those who leave comments on the videos. Some of them have helped the quality of these videos as well, because I didn't really have any plan going into this other than let me just record my charting process, right? That's for one stock, right? That was my goal, and it seems to have resonated with some folks. So I'm glad that it has, and I'll continue to put these videos out as much as possible. So with that, I hope, depending on when you're watching this video over the weekend, if you're watching it over the weekend, I hope you are having a good weekend. I hope you have a great weekend. I hope you had a great weekend. Whenever you're watching it. And then again, if you're watching this Monday morning, hope you had a great weekend. But I hope you also got some good rest Sunday night, and you are refreshed and ready for another day, another week of trading. I know I'll be looking forward to it, but I do want to get few things done outside of trading this weekend. So everybody get your little break from the charts, and come back refreshed, and we'll be ready to attack it on Monday, October 27th.